What's up, everybody? This is S Trades, and this is day 4 of the boot camp. And in this video, we're going to be going over market structure, which is the fundamentals of how the market moves and what are the trends and stuff like that in the markets, which is very essential, and you guys all have to know what it is. So, without further ado, let's get into the video. There are three main ways how the market moves, right? We're either bullish, we're either bearish, or we're ranging, also known as consolidating, or just kind of going sideways. So, what does a bullish trend look like, right? The market structure pretty much starts with a low and then gets to a higher high, higher low, higher high, higher low, higher high, and so on and so forth. We're continuing pushing up, making higher highs and higher lows, proving that we're in a bullish trend. Now, what is a bearish trend? It's just pretty much the opposite. We start with a high, we make a lower low, we make a lower high, lower low, lower high, and lower low, and so on and so forth. So you guys gotta get the gist. And now the third one is range or consolidation, right? Where pretty much market doesn't really move anywhere. We're just kind of bouncing off between a certain range, a certain area. We're making equal highs, equal lows, equal highs, equal lows. We're pretty much just bouncing in a range. We might take out like a little high, we might take a little low, but we're not really pushing past any highs or lows. So we're just kind of ranging, okay? So now these are the three main ways how the market moves, right? You guys have to know this. This is the core foundational movements of price action and how price moves. And now let's go and take a quick look at our charts just to kind of you guys understand more better. Starting off of here, right? What was happening here, right? We started with a low, right? We're pushing up, made a lower low, higher high, higher low, higher high, higher low, higher high, higher low, and so on and so forth. So as you guys could see, we are in a bullish uptrend. Right now, I'm not a trend line trader. I'm not drawing this trend line to be like, okay, well, look, we're just bouncing off this line that I just randomly drew. No, but this does help you visualize kind of where the trend is at. Are we respecting the lows? Are we pushing past the highs, right? And just to help you guys visualize, I'm gonna draw this thing out real quick. So boom, what happens? We start with a low, push up with a higher high, higher low, higher high, higher low, higher high, higher low, high high, and you guys get the gist. We keep on going forward until we stop, right? Until we stop and we change the trends, right? So we are still continuing our uptrend, because what happens, we kind of sweep out a few lows. Now don't worry about what sweeping lows means. This is pretty much all of this is just trend line liquidity that got swept out, but we are still in an uptrend because, okay, although we did sweep some lows out, we ended up continuing our trend of higher highs and higher lows over here. Boom, higher high, higher low. We started with a low, made a higher high, pushed back up, made a higher high, higher low, higher high, higher low, higher high, and higher low. Now we are continuing this uptrend until we are proven wrong and until we change the trend. So now what happens over here, right? We start with a high, right? Again, let me just draw this out for you guys. This is just a trend line just to guys help you visualize where the market is heading, right? So what happens here, right? We start with a high, right? Start with a high, push lower, make a lower low, lower high, lower low, lower high, lower low, lower high, and so on and so forth, right? As you guys can see, this drawing just to help you guys visualize lower low, lower high, lower low. And what happens then? We change the trend again. So now we went from a bearish trend back up to a bullish trend by doing what? We started with a low, pushed past these previous highs, right? Now we had a higher high, higher low. We haven't had a higher high here yet. Over here, higher high, higher low, higher high, higher low, higher high, higher low. So you guys get the gist. Now, what does consolidation look like? This right here is what consolidation looks like, which is we are just pretty much ranging between this little box that I just drew, right? What was happening, right? We're not really pushing past any highs or lows, right? This was the high over here. What happens? We're just kind of ranging between them now. This was the low over here. We just kind of sweeped out. You see how like we are just going below the low, but then we were coming back up again, going below the low, coming back all the way up, sweeping these highs now, going back up lower, back down lower, and we're just kind of moving sideways, right? We're not really pushing past any lows or highs. So this is what's called consolidation. That's what it looks like, right? Now, just a quick question for you guys, right? Just by looking at this chart, right? Where are we? Are we in a bullish trend in this whole entire area, or in a bearish trend? Just take a quick second just to answer it. We are in a bullish trend, right? Because why? We're constantly making higher highs and higher lows, right? Again, same thing, just to guys help you visualize. We started with a low, made a higher high, higher low, higher high, higher low, higher high, higher low, and so on and so forth. Now, the trend isn't going to always look perfectly like I drew it for you guys. Let me just show you. The trend isn't always going to be just looking like this, right? Perfectly higher highs and higher lows. Instead, what it's going to look like, just to be more realistic, is once we make higher highs and higher lows, sometimes you could come and sweep out the lows, but then we push up again. What happens when we make a fail, like a higher high, and then we keep on continuing, maybe again sweeping this low, kind of doing a little bit of this, but we're continuing on the trend, right? So this is kind of the realistic way of how the bullish and bearish trend will look like. We aren't going to just perfectly always make higher highs and higher lows. We might come a little below certain lows, kind of take those lows out and then push back up again, which is what's called liquidity, right? Now, we're not going to get into liquidity in this video because it's it's a completely different topic that we have to talk about in detail. So don't worry about that for now. But this is kind of the realistic approach of how to look at bullish and bearish trends, right? It would be the same thing in the bearish market. We're not going to just perfectly make lower lows and lower highs, right? Instead, what we're going to do is we're going to start with a high, make a lower low, lower high, lower low. We might come over here, sweep out this high, and then come back up here, make some of these, right? And then continuing on the trend. So this is kind of the realistic approach of how to look at the trends, okay? Don't always expect something as perfect and clean as this, okay? We're going to have some stuff like this where we're sweeping out previous highs and again pushing past the lows. So yeah, now just so you guys can see it on the real chart right over here, what do we have here, right? We're pushing past the highs, right? Pushing past the lows. Okay, higher highs, higher lows, higher highs, higher lows, right? Now this right here was the previous low that we made, right? So for the bearish bullish trend, sorry, to be proven valid, we cannot break past this low, right? We can't break past this low. But what happens, we come out, we kind of take out this low over here, and we come up over here, right? We kind of fail to make a higher high, right? So now you kind of be like, you know, see how it's not looking clean as it was over here. We kept on pushing beyond highs and stuff. So instead, what do? We kind of chop a little bit, and then boom, right here, right? What happens over here? We made it look a little lower low, right? We didn't push past the high. We come out, we sweep this low, and then we continue on going high, right? So you're not gonna always see these perfectly higher highs and higher lows, so don't always expect those, okay? Same thing over here, right? We could argue that we're switching the trend over here, right? So what happens? We start with a high, push past these lows, right? Make a lower low, a lower high, right? And then we fail to make a lower low. We kind of come up and sweep this high, but then yet the next few candles we push past the lows again, and this is a perfect example. Again, we come up again, sweep out this high, and what happens then? We kind of push again, and then boom. Now this is how a very clean bearish trend looks like, right? Compared to this, right? Then what happens? We make a lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, and you see how like we come very close to the highs, but we still keep on pushing further, right? We keep on pushing the trend further, lower low, lower highs, lower low, lower highs, and so on and so on. Now I don't know if you guys heard of this term, but the trend is your friend, okay? A lot of people try to catch the tops. A lot of people try to predict these moves, right? A lot of people try to catch this bottom or try to catch this top. You guys don't want to do that, okay? Catching reversals is very difficult, and it requires a lot of experience in the market to be actually catching reversals, right? In my opinion, the easiest way to trade is just trade with a trend, right? If you see that the market's pushing lower, and we're in a bearish trend, lower lows, lower highs, lower lows, just look for shorts. Do not look for longs, okay? Because a lot of the times you're gonna get stopped out. You're gonna lose a lot more often if you're just trading with, compared to if you're just trading with a trend, okay? It's a lot easier to visualize this, okay? We're continuing this bearish trend. We're making lower lows, lower highs. So why would you even try to look for a bullish play, right? Like it wouldn't really make any sense, okay? So the trend is your friend. Trade with the trend. You're gonna get a lot more money with it compared to if you're trying to capture always reversals, okay? Now, to again, if for some reason you can't tell where the trend is at the moment, if you're just having difficulties reading it, you could always just come over here and just, instead of a candle, just put on a line chart, right? The line chart will make it a lot easier for you, right? Now you could clearly see where the trend is heading, right? Right here we have our consolidation. Then we started to make what? Lower lows, lower highs, lower lows, lower highs, lower lows. And you could easily see where the market is going, right? You see the lower lows, lower highs, right? Again, if you guys can't still see it, you guys could draw your line, see where the market is going, where are the highs getting respected, are we pushing past the lows, right? So just kind of looking at it again, right? You see all of this, right? What is this? This is a bearish market over here, right? We're pushing past the highs and respecting the lows, right? Higher high, higher low, higher high, higher low, higher high, higher lows, and you guys get the gist, right? Now at some point you guys are gonna have to be looking at these candles, and it's gonna just become natural to you guys. You're like, okay, this market is bullish because, you know, I see the candles, right? But if you're having just any trouble reading it, switch to a line chart, kind of analyze it real quick, and go back to the candles, because, you know, candles really tell you more story. And also, what you guys have to realize, right, the higher time frame always holds more power compared to the lower time frame. So if you're on an hourly, 4 hourly, daily, whatever, and if you're in a bullish market, right, that means that trend is getting respected more than the bearish play, right? So let's say instead of you trying to catch the reversals and you're trying to trade with the trend, right? Let's say this is on a hourly, right? We're in an hourly. We're showing that we're in an uptrend, bullish trend, right? So we're looking for longs. We're looking to buy the market. We're looking to go up, right? So let's say the market opens, right? And you're on a 5-minute time frame, right? You could be over here, right, at this point in a zone, and the lower time frame might look like not like this, right? It might look like this, and then now we're kind of starting to go a little lower to retrace a little bit, right? So now you might be getting confused, like, well, my 5-minute time frame is showing that we're going lower, but yet this is just a quick retrace right here, right? This is kind of what we're looking at. It's just a retrace to what? To later just push past the highs and then continue our trend, right? So don't get caught up in the lower time frames, right? If you're looking at a 5-minute and you're looking a lot of this smaller movements, right? Do not switch your trend. Don't think that, okay, now we're bearish because on a 5-minute we're pushing past the lows, we're making lower lows, lower highs, but on an hourly, 4-hourly, daily, and weekly, we are in a bullish trend because now on a on a higher time frame, we're pushing past the highs and respecting the lows, right? So if you guys are a little confused, if you guys get a little messed up on a lower time frame, just zoom out, go on an hourly, go on a 4-hour, and then just look at the chart. Where are we? Where are we currently trading at? Are we bullish? Are we bearish? Don't focus too much on the lower time frames. Just to show you guys an example, right? What's happening over here? We're in a 4-hourly. We're clearly in a bearish trend, right? We're making lower lows, lower highs, lower lows, lower highs, right? So now let's see if we go on a lower time frame. What are we gonna see? So now this is a lower time frame. We're in a 5-minute, right? The market opens up and now we're like, oh my god, we're bullish now. We're pushing up past the highs, past the respecting the lows. We are now bullish, guys. Just zoom in, right? We're on a 5-minute. This might look bullish to you at the moment, but if you zoom in on the 4-hour, it's just a retrace. We're just retracing to what? To these imbalances, right? We're gonna go over that later. Just to do the what? To push past the lows. We're in a bearish market. That means we're gonna expecting these lows to get broken, right? So what happens next? We respect the zone, right? Kind of just move a little bit, and then what happens then? We push past the lows. We push past the lows, although we were just, we were rebalancing these inefficiencies. We were on a 5-minute. Do not get stuck on a lower time frame because the higher time frame always holds the power. Okay. Okay, now what does the reversal look like in the markets, right? So right here on the left side of the screen, we are in a bullish trend, right? We're making higher highs, higher lows, higher highs, higher lows, and eventually the trend has to come to an end, right? We have to change the trend to either bearish or just consolidate for a bit, right? So what do we have here, right? The market ends up shifting trends, going from what? From a bullish trend to a bearish trend because this low got disrespected. We push past the low, right? We retrace and we just continue on to go lower now, right? Instead of going higher highs, higher lows, what are we doing now? We're making lower lows and lower highs, lower lows, lower highs, lower lows, and lower highs. What is this thing called? This thing is called market structure shift. It makes sense. It says it in the name, where the market is shifting from being bullish to being now bearish, or vice versa, from bearish to bullish, right? Because we're not going to always forever go up or forever go down. The trend is eventually going to turn, and we're eventually going to switch to either bullish or bearish. Same thing with a bearish example, right? We're making lower lows, lower highs, lower lows, lower highs, lower lows, and eventually we do not make a lower high. Instead, we make a higher high, higher lows, higher highs, higher lows, higher high, higher lows. And what is this thing called again? This thing is called a market structure shift because the previous low got pushed past and we respected it, and now we're continuing on to the reverse, to the upside. Now we're going from a bearish trend to now a bullish trend. So where are we currently at this moment in time? We're in a bearish market, right? Because we're making lower lows, lower highs, lower lows, lower highs, lower lows. And what happens over here, right? We make a lower high, right? And we failed to make a lower low. And instead, we pushed past this previous high, right? Making what? A market structure shift. Boom, we made a market structure shift. Now we're switching the trend. We went from a bearish trend to now a bullish trend, right? We broke this high with a lot of displacement. The candle closed above it, right? So high, high now, high, low, higher high, higher low, higher high, higher low, and so on and so forth. And then what happens, right? We're in a bullish trend over here, right? As you guys can see, boom, we're in a bullish trend. What happens then, right? We make our final last higher high, higher low, and instead of pushing past this high, we failed to make a higher high. And then what happens? We pushed past the previous low, right? So now we break our low, making a market structure shift. So now we went from a bullish trend back down to a bearish trend, right? Because we pushed past this low. We're not doing what now? Make a lower low, lower high, and then continuing on, right? Let me just show you a few more examples, guys. Where are we over here? We are in a bearish market, right? We keep on pushing past the lows, lower lows, lower highs, and all that and so forth, right? Then what happens, right? We have our previous high over here, right? We make a market structure shift because we pushed past the previous high, right? And now we went from a bearish, right? We went from a bearish market to now a bullish market, right? We pushed past the previous high. Now we're in a bullish trend because why? Higher high, higher low, higher high, higher low. And it's as easy as that, guys. You know, you don't have to complicate these things. It's just a very foundational thing that you guys have to know. Now, one last thing that I guys want to discuss is bodies and wicks, okay? Because bodies and wicks tell you two different stories, and it's really, really important to pay attention to that because a body closure above a previous high or a previous low is much more different if it's just a wick. Because what happens is a lot of the times, instead of pushing past the highs and the lows, so let's say we're in a bearish market, right? We're going lower, right? And we're pushing past everything, and now we come up, right? We sweep our previous high, right? Our lower high, but then we keep on dumping lower, right? We come up again, we make our lower low, lower high, and instead of again, we come up real quick, sweep our high, and then keep on pushing lower, right? Same thing with a bullish trend, right? So we're going up, right? Higher highs, higher lows, right? It's not gonna always look perfect. So what do? We come a little lower, sweep out our previous high to just what? To push back up again, right? Make our lower, higher highs and higher lows, come up again, come lower, sweep out the low, and push up again, right? This is how realistically the market is going to look like. Now, let me just show you a few examples. So right here, where are we? We're in a bearish trend, right? Easily at some point, you know, as you put in more time and you practice more, you're going to just be able to identify trends really easily, right? So now let's take a quick look at it. So we're in a bearish trend, right? This is our previous lower high, right? What happens here, right? We end up coming up, we end up taking this high, right? We see the wicks come up above it. And as you guys can see, if I zoom in, not a singular body of these candles closed above it means that we haven't changed the trend, right? If we were to change the trend, the bodies have to close with a lot of displacement. The bodies kind of have to look more of like this. You see how these candles are big and fat? The bodies are fat. They have to close above this high in order for us to be in a market structure shift, in order for it to reverse, right? Here, we didn't do that because why? We wicked it out, and then what do we did then? We kept on pushing lower, right? Now, how does it look like once the body closed, right? So now, right here again, perfect example. What happens then? This is our lower low, right? What happens here? The low gets broken with bodies. You see how the big bodies close below it? That means there's a lot of displacement. That's what the displacement is, right? We close with bodies and then we continue our trend, right? So another example is right here. Where are we currently? We're in a bullish market. We're making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, right? This is our previous low that we made. What happened here? We came up, the market ended up sweeping out this low, right? And then what happens then? We push up, right? This constantly keeps on happening. You see how the body's not a single body closed below it? We just kind of took this low out with a wick, and then we continue to push up higher, continue to push up higher. You see, this is why it's so important to wait until the body's closed, because some of the people right here, right, we saw this big move, right here we have a 150 point move. Now there's a lot of sell-off, there's a lot of sellers pushing the market down. Now people are like, oh, let's say we're gonna shift the market, right? So boom, we kind of broke this low at the moment. Yes, you broke the low at the moment, but what happened then? We wicked it out, the body didn't close above it, and instead we continued our uptrend, right? Which is really important. You guys have to see, you have to wait until the candles end up closing. You have to see if the body closes below or above the highs and the lows, because if it doesn't, it most likely is just a kind of sweep for the trend to actually continue on a higher time frame, okay? Again, where are we right now? We're currently in the bearish trend. We're making lower lows, lower highs, lower lows, lower highs, right? This is our previous lower high, right? Right here, marked out. Again, what happens? The wicks come above it. We wick the wicks. We wick this lower high, right? And then what happens? We push back lower, right? This constantly keeps on happening. You guys have to wait until the body's closed, right? Because if it doesn't, then you guys are going to be always getting stopped out. This is our previous high, right? What happens, right? I just want you guys to visualize how this candle looks like. You see how we have our previous low, right? So now let's see how the market actually moves over here. So we'll make our lower low, right? Over here, have a lower low. What happens? The market comes over here below it, wicks out. You see how big of a wick this is? This is very important because this will show you that, guys, that buyers ended up securing this level that, okay, although we pushed below this low, we pushed up the price and the candle all the way up back higher, which is what was discussed in a previous video about candlesticks. You know how the bodies open and close. We have this long wick. That means buyers ended up being present in here, right? So what happens then? We push up higher, right? We push up higher and higher, right? So now, if we go a little further, right? with this level got wicked out and we push below it, right? So now how does it look like when it actually pushes below it, right? So now what happens here, right? We have our low right here, we have our lows over here, right? How does it look like to close below it? You see how much of a momentum is here, right? We have all of these bodies, right? All of these bodies closing below this low and this low. Now that's how it's supposed to look like. You see, now we continue on the trend because why? The bodies ended up closing below this low and this low. This could have been a sweep and we could have pushed on with our bullish trend. So right here, you have to wait. This is very important. You have to wait until the candles close, because what happens? We come over here, we take out this low, the wick comes all the way below over here. And then what happens the next candle? Again, the candle goes below it, and then the actual candle ends up closing above it. So it's not confirmed that we're going to go lower. But then what happens? The next candle ends up closing below, and then we push on lower, okay? This is it for this video, guys. If you guys have any questions, drop them down in the comments below. But this is very essential for you guys to know, to kind of identify your trends. Where we're moving, are we moving up, are we moving down, are we bullish or bearish? And yeah, that was just day 4 of our boot camp. And if you guys are enjoying, please put up a thumbs up on this video, and I will see you guys in the next video.